Will it make any dramatic changes to the finances of ordinary Australians?
Good morning. No, I don't think so. And that's not really what this is about specifically. This is about making some little change on the margins. I saw some numbers yesterday that effectively a 0.15 rate cut, which is what's been mooted and what's most likely to happen, would save a maximum of $1,000 a year on $1 million mortgage. Now, most of us haven't got $1 million mortgages, but even so, that gives you a sense of the scale of the saving. It's better than nothing. It certainly will go into people's pockets, so that can't hurt. Also, though, it lowers the borrowing costs of the banks. It lowers the borrowing costs of business. Hopefully, it just also shows the community and the economy that the RBA is doing something, that something is being done. There is reason for confidence. I think that predominantly, more than the actual physical financial benefit, is what the RBA is looking for.
Yeah, a reason for confidence, as you said. Do you think it's a sign that the economy is perhaps bouncing back?
It's a hard one, isn't it? I mean, the economy is bouncing back. I think that's why I'm most puzzled. Look, I'm no central banker. I'm sure they know more than I do. But I have to say, when you've got so much positive news right through the economy, most metrics you look at are recovering or actually already positive. And yet the RBA may well go again today. And I have to say, maybe this is the one that hopefully puts a floor under the fall. Maybe this is the one that they need to put in place just to make sure the recovery doesn't falter. But it is hard to see why such low emergency rates and potentially, as you've already said, quantitative easing are necessary given the recovery in the economy.
And take us through that, this bond buying scheme. What will it mean for consumers?
Right, so effectively it's not going to be about consumers. This is all about making sure long-term interest rates stay low. If you buy longer dated bonds, you push the price down. And so what they're trying to do here is basically say, we want to make sure people are borrowing for the long term, that they're not worried about what the long-term interest rates will do. It allows banks and others to offer better longer-term fixed rates, for example. So if you're looking for a consumer angle, again, that sense that fixed rates, they can offer 3 and 5 year fixed terms because the bond rate is going to be low over that period of time. They can almost have some degree of certainty that rates stay low. So there is a small amount of benefit there for consumers who are looking to fix. It certainly should keep rates lower for longer, which is what the RBA is looking for. And it takes a bit of risk out of both the financial and physical economy by people worried about, okay, when do these go up? The RBA kind of saying, don't worry, we're taking action to keep them down over the next 3 to 5 years. And that should, hopefully, they hope, give the economy confidence to continue to borrow and continue to spend, knowing that long-term costs of borrowing are going to remain low.
Yeah, fingers crossed. Now, just finally, Scott, cash profits at Westpac, they've dropped 62%. How long will this take to turn around?
Yeah, this is ugly, isn't it? Look, I think it could well be 12 or 18 months, quite honestly. We don't yet know how quickly, of course, bad debts go away. We don't know how quickly the economy recovers. And lastly, although we've got some good news on house prices, if you're an owner, of course, if you're a buyer, you're in trouble. But house prices are again up. And so Westpac and all the banks, they need profit growth through higher house prices and higher amounts of lending, of borrowing from borrowers. So to some degree, that's the picture. And again, that bad debt story. We know that Westpac didn't set aside, they had $62 billion worth of deferred loans. That's a remarkably large number, not super surprising necessarily. Yet when you see the dollar value, it is enormous. So if you think about that, they're starting to bring that down now. Their business deferrals have gone from $10 billion to only $1 billion. So the quicker the economy recovers, the quicker bank shareholders will hopefully get back to even.